Good morning. It's Monday, March 24th. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. I got a cold. I don't know, probably drinking too many beers watching that March Madness here. So still got my final four in lock and loaded. I got Florida winning the whole thing, Alabama, Auburn, and Purdue. I went to Purdue, if you didn't know that. Triple majored in finance, marketing, and economics. So way back in the day here, right around 2000. So if you did register for the chart pack over the weekend, we're going to send it out before the U.S. equity cash market opens here. So it's kind of a no frills approach. So we analyze the key levels, support, resistance, some of the trend lines. We're not curve fitting moving averages. We're not adding like stochastics and things like that. Just looking at the data and at the levels. So you can register in the link using the link below if you haven't done so. Again, no frills approach looking at the metals, kind of different from some of the other research pieces we put out on the metals. So looking at the strongest markets based on technical strength, we got gold that slipped a bit on Friday, as well as feeder cattle. Copper edged higher with a small gain. So what's the worst performing commodity? I had someone ask me that over the weekend, and it's milk. Milk has just been in a steady decline here. And it's interesting because when you go to the grocery store, there's no eggs there. They blamed inflation, they blamed the administration, but the reality was a bird flu just wiped out half the eggs there. But plenty of milk there, so you got to substitute. Now, looking at the previous day, the performance leaders, system trades, kind of this mixed basket. You got orange juice, your best performer. So remember, that was the worst performing commodity for a while, bouncing back up. You have palladium kind of pushing up. That's a market that I outlined in that chart pack there, kind of getting to some lower levels here that's got some interest. Soy meal, lumber, we talked about lumber the other day, and rough rice. So looking at your worst performers, cocoa. Remember, cocoa was all the talk last year, that and coffee shooting up to these unprecedented levels. So really coming off. I think end users are looking for substitutes and things like that. And I think that, you know, the jig is up on them manipulating the cocoa market here for the moment. And then finally, you got silver was the worst one along with aluminum. Silver down 1.5%. And, you know, you look at silver and things like that, it's really been kind of this investor shift out of silver and into copper and into the gold market. I know you silver bulls don't want to hear. I'm just telling you that that's what I'm seeing, and that's what some of the different matrix, they show that as well. So looking at system buys, none, and that's for informational purposes only. General check on the markets overnight. So we got stocks rallying. You got the S&P up 1%. You got the NASDAQ up 1.25%. Big move higher in the overnight session. Kind of pushing up to breaking through that 38% retracement from the highs to the lows. Looks like that 50% retracement might be an area of interest. See if this bounce here, this dead cat bounce, gets a little bit of frothiness to it before we roll back over on the equities. So that's something I'm looking at. And it's really, you're seeing treasuries are slipping a bit.
Must be prudent and cautious on monetary policy.
Sorry about that. So you're seeing treasuries slip on signals that the next round that President Trump, his tariffs, that they would be more measured than previously suggested. He was going to do these blanket ones. Now they're going to target it here and there. But the markets are still on edge after, Donald Trump has a deadline of April 2nd to impose those reciprocal tariffs on the country. So looking at the precious metals overnight, some things to watch in today's session. So looking at April gold up about $12 at 30.34. Your key levels here. So 30.26, that's your pivot point. We're back above the pivot. 30.50, I think, is your next major kind of resistance point. That'd be 30.75 to 80, and then of course 3100. A lot of people asking me, hey, how high can we go? We're seeing a lot of the banks in some of the analysts coming out here with the 31, 33, even $3,500 gold targets here. Your support level on April gold going to be right around 3,000, 29.75 below that, 29.50-ish. 29.50 is kind of a big level here. That would be a big reset, and that would be kind of a return to the scene of the crime. If you've been trading with us for a while, you'll note that 29, like 34 to 50, we could not get above it. We got above it once or twice, but then it was just a struggle for a while, and then it kind of strung together those 2 days in a row, and then it broke out to the upside and then broke through 3,000, consolidated around there, closed above it, and then we're kind of trading right around a little bit higher than that 3,000 level. So something to note is that April gold it's going to come off the board at the end of the week. So Friday, you're going to want to roll over to June. So we'll start putting some of the June data out there and things like that. So looking at the silver market, 33.71. It's up 23 cents, so nice recovery. We're back over the pivot, which is 33.59. The next resistance point is 34.05. Remember, that was a critical level of support we kept coming down to. Now that's the new resistance point. You get above there, it's going to be 34.56 and $35. You go below it, it's going to be about 33.05. So big drop where silver would fall into its next support level, and then 32.62. But if you look at silver again, 90-1 on the gold silver ratio, and the market has kind of been selling off a little bit harder than the gold market over the last 2 days. So again, shift I'm seeing out of silver and into more gold and copper. So if you look at the ETF flows, the exchange traded funds, it says exchange traded funds added 134,000 troy ounces of gold. I kind of round, I'm not going to tell you 134,076 troy ounces in the last trading session, bringing this year's net purchases to 4.25 million ounces. ETFs, they cut 1 million troy ounces of silver from their holdings in the last trading session. Here it brings this year's net sales to 2.1 million ounces. So the year to percent change, we're seeing an edge higher on gold, 5.1%. That's the highest that we've been tracking since we've been tracking this matrix year to date. And then you see in silver, 0.3% down. That's slipping. We got to 0.1% down. It looked like we were going to get unchanged on the year. And then it's really, you need the investor, you need the general person to come into the market and start allocating to silver on the ETFs with the options and things like that, the different products. And that's where you get kind of this broadening rally, and you get the tide that lifts all boats here with the silver market. Now, I'm disappointed in silver because with gold up here, with copper up here, I mean, silver should be a lot higher. Let's be honest. So copper, crude oil, nat gas, couple things on my radar. This was a report that came out by the International Energy Agency over the weekend. They said that global energy demand grew 2.2% in 2024, faster than the average pace, and the consumption of electricity rose around the world with increased supply of renewables. So they talk about nat gas supplies increasing. And that's kind of why natural gas, the volatility there, because you don't know how big these drawdowns are going to be with the injection data and things like that, or how long these storms will last and things like that. So that's where you get the increased volatility. Nat gas slipping below $4. We have been actively playing the downside of natural gas on any kind of big rally because we know that eventually the supplies kind of build themselves back up. The demand weighs off as you get closer to spring, more normalized temperatures, and you get into the early stages of summer where it's not too hot. And then you start looking at things like China. It says that they're emerging and developing economies. They accounted for 80% of the increase in global energy demand. So this comes despite the slower growth in China. So you get crude oil kind of creeping up 60 cents, 68, 89. You get copper futures up about 6.15. So copper up 1% overnight. And it's the threat of copper tariffs has really changed the dynamic of that market. It creates a massive incentive for traders to ship copper to the U.S. where prices have soared, and that's above the rest of the world. So you get this disconnect, and they estimate about 500,000 tons of copper headed to the U.S., and it's leaving the Chinese copper market with insufficient stockpiles, and it forces China to become an active buyer and compete with the U.S. for those higher prices. So looking at some key events this week, kind of want to cut it short. We got flash manufacturing PMI, services PMI, then you get consumer confidence, durable goods, unemployment claims, the core PCE, and then personal income and spending later on the week. So, we got a lot of stuff going on here. But you got any questions, give us a call. You didn't get the chart pack, use the link below. Chart pack, again, no frills approach, just one email. Bam, these are the charts there. These are the levels that we're looking at. And those are a lot of times that we look to add to positions on a longer term basis here. Not your intraday. You're going to use intraday, use the pivots, use support and resistance levels, use the tactical ranges, things like that. So, got any questions? Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck, good trading.